to present again. Sometimes I think we're the bad penny that keeps coming back to keep presenting. But yeah, we're very happy to be able to do this today. And I'm joined with my regional tax partner, Tracy Leishman, who unfortunately is from the state of Alberta, but we won't hold that against her today. And we'll just move on to the next slide here. This will be our next one is sort of our CYA slide. So we do our very best to update our slides based on what the government's doing. I don't think Tracy or I had time this morning to tune into the news to see if they announced anything new today. We have the announcements up to yesterday. We've actually been, I know I've been personally expecting quite a few more releases from the government in the last couple of weeks, and I haven't really seen anything come out. That'll be more to do with the CEBA, which I'll cover at the very end. Expecting to see more about that. But today we're going to focus especially on the rent subsidy. And for those of you that don't rent but own your own building, yes, it applies to you as well. Sorry to steal your thunder, Tracy, but don't want people to tune out right away. And we're going to cover that off because it is the newest program. And then we're going to go from there. We'll just do a bit of an update on the emergency wage subsidy, which a lot of you are probably aware of now. And we'll cover off the T4 requirements. We have, a whole 10 days yet to get the T4s out. So if you haven't done your T4s, this would be important information. And if you've done your T4s, it might have been an important information for you to have. And we'll have a little bit of a discussion, an update on the CEBA, the small loan program. So with that, I'm going to turn it over to my much more knowledgeable partner.
Thanks, Scott. And I'd say I have been looking too, because I thought the government was going to send a few more updates out, but haven't seen anything lately. I think the whole vaccine fund that they're having has taken over the lives of the legislators right now. So they've left this alone. So, this, it's fairly new, but really it goes back to kind of the end of September for renting. And the legislation did come out at the end of November there, mid-November. And it was, kind of a new take on what they had first started with the Emergency Commercial Rent Assistance Program. And kind of from feedback from that, they've turned this into more of a program looking more towards the tenant and property owners, so that they're more in control of claiming it based on what their situation is. So kind of a brief, what is it here? It is to support rent. And if you own your own building, it is a kind of a mortgage interest support. And like I said, it goes back to September 27th. And the periods do follow in with the CEWS, the wage subsidy. So you'll see some of this stuff, and what I'm talking about really does, if you're familiar with and have been doing the wage subsidies, a lot of the legislation follows exactly the same. And some of the rules are kind of goofy because they are based on the wage subsidy. But we will kind of go through a bit of that. And there was some changes made as soon as they released it. They had made a change where with the rent, they got a lot of feedback saying, well, if we can't afford to pay the rent, can we still apply for the subsidy to get funds to then pay the rent? And we'll cover that here a bit later. And similar to the wage subsidy, this is all managed by Canada Revenue Agency, and their website is a place where you would go to actually do the applications, and there's a bit more information there as well. So the subsidy was divided into two different parts. There is a base subsidy, which is based on the entity's revenue declines. So similar to the wage subsidy, it's based on the further revenue decline you have, the higher the subsidy you'll receive. And then there's also a top-up subsidy. So as long as you do qualify for a bit of the base subsidy, if you are in a spot where there has been a public health order to shut down either all or a portion of your business, there is a 25% top-up subsidy that you might be eligible for. And the top-up is very kind of industry business specific, and we'll cover kind of what that means to be in a health order here. So the base subsidy, the calculation is again based on what the revenue decline is. And the revenue declines are calculated exactly the same way they are for the wage subsidy. So if you've done the wage subsidy already and have done the revenue decline calculations, you're kind of halfway done your rent subsidy calculations. And it is tiered to where if your revenue drop is 70% or more, you're hitting the maximum subsidy of 65%. If your revenue is between the 50 and 70%, you do have to get your exact calculation. And then there is a formula to calculate what your rent subsidy would be. And if your decline is less than 50%, it's 0.8 times your revenue decline is your percentage of what you would receive as a subsidy. So these calculations, again, once you've calculated what your revenue decline is, if you are filling out, there is kind of a worksheet on Revenue Canada's website where you can put in your numbers and it will do the calculations for you. So you don't necessarily need to know all of the math on here, but if you are a person that loves spreadsheets, you can build your own spreadsheet as well and do the calculations. For the top up, this one, it does require that you're in a spot where there is a public health order that is in existence for at least 7 days. So you have to have at least a week, but yet it is calculated based on how many days you are subject to a health order lockdown divided by the 28 days of the period. So that'll give your percentage. So if you're hitting, some of these things happen over one or more periods. So, they do require a certain number of days for you to be in a lockdown before you can claim it, but that doesn't have to all be in one period. So it can be a couple of days in one period and the rest in the next period, and it's just prorated. So what are the limits? So they did put in some limits to these programs, and the one limit is 75,000 is the maximum per location. So if you have a company that has multiple locations, there's a limit per location. And then if you do have quite a few different companies that are all kind of controlled by the same person, there is a limit of 300,000 per the group of companies. So just watch that. There is, they did throw in a couple limits there. And then, so once you've kind of got your revenue decline calculated and you know if you're subject to the top up or not, what the actual subsidy is the revenue decline plus the top up if you qualify times your eligible expenditures. And then this one kind of applies, but not so much anymore. We have passed the deadline now of when kind of the first wage subsidy filings were required to be made. So if you did an election on those ones, you can elect kind of for your period 5 and onward differently than the first 4. But if you have made elections under the wage subsidy, you have to make the same elections under the rent subsidy. So like I was saying, the two programs kind of mirror each other with regards to the revenue decline and the reference periods. So you do have to make sure you're being consistent with both of them. If you have, filed something and you find that, well, really, I need to change it, there is still an ability to amend, which we'll talk about a bit later here. But just to watch that you have to.
You can get it and then just put it in the pile. He's going to do that tomorrow.
So then with the qualifying revenues, like I said, they are the same as the CEWS. And so what the general kind of definition of what the revenue was the inflow of cash receivable, other considerations arising in the course of your ordinary activities. So again, just to watch, it is just your normal revenue. If you've had some extraordinary item or something that really isn't part of your normal revenue stream, then that can be excluded from your revenue calculations. And with some of this, we did find if you're just looking up information under the rent subsidy, sometimes you do have to look at the wage subsidy that CRA has more questions and answers on this. So if you are kind of have a particular situation that you're not sure of, look there. If you are still stumbled, please reach out to Scott or myself and we can certainly help you out with that. So again, once you've kind of looked at, what are your gross revenues, again, it's your general accounting practices. What are your revenues for each period? And then you'd compare them to your period that was either the same month last year, or if you have elected, you can still compare to January and February average of last year. I was expecting that they might have some a change with that or something, but so far there's been nothing or no hints that they might be changing that. So it's still comparing kind of this month's revenues to either the same period last year or the average of January and February. And once you've elected to either use the same period the year before or the January, February average, you have to use that same method throughout the whole program. And again, if you are receiving any of the wage subsidy or that 10% subsidy that was back many months ago, those revenues are excluded from the calculation. So if you're receiving some of the government fundings, they are excluded. Those are the only ones they've really said that they've excluded. I haven't looked into or seen any of the revenues with regards to, I know there's some provincial fundings out there. But again, if that is an issue, please let us know and we can look into it a bit further for you. And if you are dealing with, and we'll cover this in an example here, if you are a situation where you have kind of a company that owns the property, renting it to another company that you have your operations in, those revenues between the two companies are excluded as well. They're considered non-arm's length revenues. So if you're getting into that, again, these are where the rules get very complicated. And I would say you should be reaching out for help in doing those calculations. So these deeming rules for kind of periods 5 and onwards, which I used to have a list of what all my periods were, but this goes back probably to about your July, August timeframe. If you've kind of made an election to do your revenue calculations one way back in those periods, they continue on for the rest. But they've also deemed a couple of things that is beneficial, where if your revenue reduction in one period is greater than the next period, you can actually use the prior month's revenue reduction. So the example here is just if you know you're looking at October and your declines were 27% and September was 53%, for October you can actually go back and use the September revenue decline. This one, you don't always have to use the prior month though. So if you went then, if your November revenue decline was actually back up to say 30%, when you get to November, you can just use November's revenue decline again.
Okay, I'll take this check.
Right. And so with it, again, they have made it so the greater your revenue decline is, the greater your subsidy is. So we've kind of covered that a little bit to say, you know, again, if you've had just even a small 10 or 20% revenue decline, there is some subsidy that's available. You might need to do a bit of a calculation though to say, is it worth, especially if you're hiring outside assistants to get it done, is it worth doing, or is the subsidy so small that we might not? But again, if you're doing multiple periods, it might be worth doing them all kind of at the same time. So we just wanted to kind of stop here for a second and just wondering if there was any questions so far. And I don't know, I've lost my chat, so I haven't been watching that.
I'm watching it for you.
Yeah,
Thanks.
I was just typing one in actually, so maybe I'll just say it. Do we have any idea what the reporting periods are going to look like for the wage subsidy now that it's been extended to June? So like after March, kind of that March to June period, I'm thinking that, you know, March over this year, over last year, once COVID did hit, we're not going to see those significant drops in revenue.
Yeah, and that's where we are kind of waiting to see what the government will release. So far, they've kind of let us know the periods are kind of, I think February 14th was the end of the last one till March 13th. And then we've heard nothing after that. So we're kind of waiting and seeing what they will do. I know the legislation, you know, they're back working, so I will expect there probably will be some announcements shortly, hopefully on it, because it does leave businesses a little wondering what this will look like. And I would say with that, the rent subsidies will follow the same periods as the wage subsidies as well with that. So some paperwork that has to be done and just some qualifications with the rent subsidy. And again, like I was saying, the rent subsidy follows a lot of the wage subsidies. So it does have some rules here that look a little goofy for the rent subsidy, but you do have to be an eligible entity, which does cover most corporations, proprietorships, small businesses. Most of them will qualify for it. You have to file your claim within 180 days at the end of your qualifying period. So we do have some claims. I think with the rent subsidy, the first won't be due till kind of mid-April, but just to watch that now. Going forward, every month, there's kind of a new claim period that will be due. You do have to sign and say that someone in the business is being responsible for filing the claim and doing the calculations. And then here's where some of the rules get a little goofy, that you had to have, number 2 is a payroll account as of March 15th. So most companies with just a rental building may not have a payroll account, but they are just tying it into the wage subsidy rules. For it though, you do have to have a business number as of September 27th. And then there is some special rules if you're buying a business. But some of these rules, they do get where if you have just started a business and you have no revenues, in the prior period, the only thing I could find from the government was it'll be difficult to make a claim. Well, they didn't really answer the question very well. They've just said, they basically have said if you're just starting out a new business and you're not buying a prior business, that you likely won't qualify for any of the subsidies because you don't have any prior history, any prior revenues to compare to. So, I think that's another thing that we have been watching for is, will there be a change in that? So now that we've kind of done some math and did some calculations, what really is your qualifying property and what are the qualifying expenses we'll get into here. So a qualifying property, if you are a business that either owns it or is renting it, it is real or movable property in Canada. So that's being Canada. And the business either owns or rents it and uses it in their business. The properties that don't qualify are your principal residence or your personal use property. So if either yourself or a family member lives in the property, and if you use it for your like a home business, those ones won't qualify. So it does have to be a separate from your actual home. And if you are owning a property and you use it primarily to earn rental income, so primarily would be more than 50% of the space is used to earn income from arm's length parties, then you wouldn't qualify. Because that's where they're saying the arm's length party now is really the renter of the property, and they would then be able to make their own claim based on their usage of the property. So the expenditures, so the general one is they must be paid or payable to an arm's length party, and they must be in respect of a claim period, and they must be paid or payable pursuant to a written agreement that was in place prior to October 9th, 2020. So you needed to have a written rental agreement, or you're renewing a prior rental agreement and you've renewed it based on very similar terms. And that's where if there was, rental agreement for property, it can be renewed and it can be assigned to another renter of the property. And if there is any rent earned by subleasing the property, that has to be deducted from the claim. So again, they've kind of made it so that it has to be amounts paid to arm's length properties. So this, if you actually are renting the property, so this is very much so you have your business in a property in which you rent and you're paying rent to an arm's length individual. So arm's length being someone that you're not related to. So it's not your spouse, a parent, a child, or another business in which you own. So if you're paying rent to a third party, then, and it's payable under a lease agreement, so you've got your written agreement in place, your base rent and any expenditures that you're required to pay under that agreement. If it's property taxes, you're required to pay or any other amounts that are regular payments that you're making to use that space, they're all part of your rent subsidy. So it doesn't exclude, though, if there's any taxes on it, if there's charges for damages made, or if you are being charged any interest or penalties for late payments, those ones don't count, or if it's other special amounts, so those ones wouldn't count. So if you are renting and paying rent to a third party, basically whatever rent you're required to pay, that's part of your subsidy. So then to get to the people that are actually owning the property. So it's very different if you're owning the property and either renting it to another business that you own, or you're using it in your own operation. Those properties, you can only claim your property taxes that you're paying, including school taxes, municipal taxes, property insurance, and interest on the mortgage. And they did limit the interest on the mortgage to say this has to be what is on the original mortgage balance. So if you've had to refinance, some work has to be done to go back and say, what was the balance of the original mortgage and what is the interest related to that? And there's also a limitation. If your original mortgage was for more than the cost of the property, then it does limit it to just what the cost of the property was. So in this case, we had lots of questions on, well, what, I haven't paid my property taxes in the period, I haven't paid my insurance in the period, what then? And the calculations have allowed then just a proration, and basically they've taken, because there's 13 periods in the year of the 28-day periods, you can claim 1/13 of any annual expenses. So if your annual property taxes, your annual insurance, divide by 13, and that's the amount that you can claim for the period. And on the CRA's website, they actually will do the calculation for you. If you put in your annual amount, they'll prorate it. We have had some questions too, where we notice now for, with the new year, they're wanting what the 2021 property taxes and insurance are. Well, a lot of people don't know what that amount will be yet. So at this point, we've told people we'll just use what will be your property taxes for this year. If it's the same as last year, do that, knowing that you may have to amend your claim at some point when you actually do find out what this year's true property taxes and insurance will be. So when are they considered paid? Again, if you haven't paid them, though, if you haven't paid your property taxes or insurance, or you haven't been making your rent payments because cash flow won't allow it, they are deemed to be paid, and you can claim the rent subsidy on the payments, provided that you use the rent subsidy to pay those payments within 60 days of receiving the subsidy. So if you are behind on some of these payments and you haven't been able to make them, it is, kind of a great thing to go and get the subsidy amounts, and then you can use those amounts to pay those expenditures. So kind of to, I guess, a recap again of what we've just covered, based on the type of building that you are renting and whether you own it or are actually paying rent, if you're a tenant, again, you can claim either the rent, the insurance, common area cost, property tax, or interest on the mortgage. So this kind of just another summary of that. If there's any questions, please type them in, and we will have a break here for more questions shortly. So the next part we'll just cover it here will be the top up. So the top up is really where you need to have an actual shutdown of part of your business, and that part of your business must account for at least 25% of your total revenues during that kind of your reference period. So you can go back to your reference period and say, okay, this part of my business was shut down. It did represent more than 25% of my total revenues, and I then can make the top up claim. So again, there was some questions on this, and they've come out to say that it has to be very much, very, very limited and very specific to shutting down part of your business. And there has to be, an activity or your business to shut down. I guess the easiest example, especially over here in Alberta, would be back, we've just started opening up our restaurants here the last couple of weeks for dine-in eating. So if a restaurant is shut down and their dine-in eating represented more than 25% of their revenues, then they would qualify for the top-up during that period in which they were shut down. So the top-up is very much a 25% kind of fixed rate, and either you qualify or you don't qualify. And again, the other criteria, if you are faced with a shutdown, is your revenues in that period must have declined from your reference period. So if your reference period is either the year prior or your January, February average, you must have a decline during that period of time. Oh, I think I went backwards, sorry there. So what doesn't qualify? This was almost a little easier to say it doesn't qualify. So if your business actually has seen a decline, or you've almost you yourself has had to shut down part of your business due to travel restrictions or other restrictions, but it wasn't shut down due to a public health order, then that doesn't qualify for the top up. So I know this is where a lot of businesses have been impacted, because that part of their business, they didn't necessarily shut it down, but there just hasn't been any activity there due to other restrictions, but that won't qualify you for the top up. There has to be something very specific where you've been ordered to shut down that part of your business. And then if you are subject, though, if you haven't been following the rules and the government has come and shut down your business for not following some rule, you won't qualify for the top up, because even though you've been shut down now, you were shut down because of not following the rules. So they did throw that rule in there as well. So just to watch that, but it is a tricky one and a tough one, where I think a lot of businesses have seen the declines because of COVID, but may not quite hit the public health restrictions. So I think that's all I had on the public health restrictions there. So I'm going to go through a couple of really quick examples here of just how the calculation works and how the numbers might look, just because I'm a kind of a numbers and example person here. So again, first you have to calculate your revenue decline. And if you've done it again for the wage subsidy, you're kind of got part of your work done for you already. If you're not part of the wage subsidies, well, welcome to the revenue decline calculations that others have been doing. It's depending upon your business and everything, they're either quite easy or they can be a bit of work to do. Then you gather up your expenditures. So in this case, our property is used in our business, so we don't pay rent anywhere. We just pay the expenses of our property. So we're going to look at our property taxes, insurance, and our interest. And then we're going to say that we've got them paid. We've kept up and we've paid them. So just to throw some amounts out there that's allowed for easy adding on my part, we've got 5,000 of expenditures for the period. And if our revenue decline was greater than 70%, we had hit the maximum, and our subsidy would be 3,250. So just to put some perspective on, if your expenditures for a period are $5,000 and you did have a revenue decline of greater than 70%, you would expect to get $3,250 of the subsidy for that period. If your decline is 60%, then we're into the math where we get to claim 52.5% of our expenditures, and we're down to $2,625. If our revenue decline is 40%, we're into some more math again. We get to claim 32% of our expenditures, which leaves us $1,600. So just to know, like I was saying, if you're needing extra help to get these done, it is good to kind of get an idea of what your expenses look like, what you might expect for the subsidy. If you're getting a subsidy of $1,600, you don't want to go out and pay someone $2,000 to calculate it for you. I don't think you would have to. That doesn't seem quite right to me. But just to watch that if you are looking for help for that. So now another example, if you're actually renting, you have a holding company owning your building and an operating company in which your operations are run out of, you're probably paying some rent. from the operating company over to the holding company. And because the same person owns both companies, it's considered non-arm's length. So this is a good example to show when we're talking about non-arm's length, the NAL, non-arm's length, it is really having the same person own two businesses, or if it's spouses owning, one spouse owning one business, the other spouse owning the other business, again, they're considered related and would be non-arm's length. So the first issue we run into here is how is our revenue calculated? Because we are looking at our holding company that has the rental, the real estate. It would be the one making the claim. What is its revenue decline? And there is some special rules, and one says, well, first of all, the holding company has to exclude any revenues from a non-arm's length source. So if its only revenue is rent from OpCo to HoldCo, now it has no revenue to compare because we've had to leave out all of our revenue from our non-arm's length OpCo. So if that is the case, and more than 90% of the holding company's revenues are from the operating company, then we can actually do an election and the holding company can use the operating company's revenues and its revenues declines to calculate its subsidy. Again, I think with this one, I just want to make sure that, my last comment there, that it's very complex. If this is your situation, make sure you do understand how you're doing the calculations, and please reach out for help, because this is where it does get very complicated, and we do want to make sure that the right revenue calculations are being done. If your holding company is one where you've got a building rented to the operating company, but maybe you own 2 or 3 other buildings that are rented out to third parties, now you have to use their rents to calculate your revenue decline, which is very confusing because now you're using rents from third parties to calculate your revenue decline to determine if you can actually make a claim on the building that you're using in your own operations, which might actually have a revenue decline. So there is, again, some special rules with that as well. So if you do find yourself in that situation where you've got, rent from different sources, it does become very complicated, but there is still potential some subsidy available for you. So some elections, just to kind of recap, and some of these, again, they fall with the wage subsidy and the rent subsidy. You can make an election if your business is such that it's easier to calculate your revenues on a cash basis versus an accrual basis. So an accrual basis is generally what most businesses do. They accrue their revenues, accrue their expenses. But if you find the cash basis would work easier, you can elect. And this election, again, was good for all 10 periods. I think period 10 ended. I think we're in period 13 now. So they haven't come out to say, other than in general, that election should continue on for these next few periods up until the end or middle of March. But once you make that election, you want to make sure that it is the right one for your business. And then just the timing of this. So like I say, their first period for the rent subsidy falls in period 8 of the wage subsidy, and the deadline for the first applications are April 22nd, 2021. So there is a bit of time, and you can, like I say, just do all of them almost at the same time. So, if you're making any elections or needing to do different revenue calculations, that you feel comfortable with that. I know the applications that were made starting at the end of November, funds have flown fairly quickly out. And again, though, if you are doing anything where you've received any paperwork from the government, so make sure you are checking and opening up those envelopes the government's sending you. If they have come back and said that, we don't agree with your calculations, we're going to reassess you, you have 90 days from receiving that, or from the date on that envelope, which is usually, I find, even in Grand Prairie, you guys in Fort Nelson and probably might take more days. Sometimes it takes a week or 2 weeks from that date to actually receiving the envelope and opening it. So watch out, the 90 days can go fairly quickly. And we have heard some, comments from Revenue Canada that they are, letting through some of these applications but are feeling that they maybe or are making comments when they're calling for some verifications that they're going to audit it later, and that they might not agree quite with all the numbers, but they're letting it through. So again, just to watch for mail coming from them. And then again, with the other wage subsidy, the rent subsidy, you do have to have someone sign that they are taking on the responsibility of it. So I guess from our perspective, we can help our clients file these, and we have a form that they can sign to say, yep, everything's good, and they can qualify it. You don't need a payroll number for it. So some of the documentation out there says you need to have a payroll. You don't need a payroll to claim the wage subsidy. And they do ask quite a bit of documentation. So just, I've always said you probably need about 3 filing cabinets by now to store all your paperwork for these subsidies. Make sure you are keeping kind of your rental agreements, documentation of amounts paid. And I do know that they want on some of the applications the property addresses and who to contact for more information. And this one, if you run into where there's affiliated entities, I would just say that I'm hoping that you've gotten some help with this, and there is more information that is needed on the affiliated entities. And that's all I'm going to say about those ones, because I hope that if you get into this, you are getting help to help you with your subsidies. Just wanted to make another comment too. If anyone has been watching the news with Revenue Canada, they have had and it wasn't through them, I don't know the source, but apparently there was some activity with people's logon and password accounts that they found were for sale on some, I guess there is a black market for selling this stuff out there. And they've shut down, I think it was about 100,000 accounts. So if you are trying to log in and you haven't got access, or you received a I guess it was quite a cryptic email CRA sent out to the people that they thought were affected, and you can't log on, you will have to phone Revenue Canada to get reset up. And make sure you have not just a cup of coffee but the pot handy, because it is probably a 2-hour potential wait on hold with the government. So make sure you do have your documents and everything in order to answer their questions when you do get through. But I guess one good thing is they did catch it before anything happened, but their reaction of shutting everything down does make it a little difficult, especially right now when people are wanting to, apply for these programs online and do things that way. So just if you are one of the lucky ones that got that, just follow up and hopefully you can get back online.
Tracy, with that, just a couple of quick questions that came up. The attestation form has to be signed for each period and for each subsidy. So if you're doing a CERS and a CEWS, you have to do one for each and one for each period. But then the elections are for the entire period, or the entire span of time, I guess. So it covers all the periods. Yeah. Correct. And the other question was, and I think you could probably answer it faster than I'm going to be able to look it up, Tracy, is deadlines for any of the queues coming up, the 180 day deadlines. I know we've finished off the first 4 periods already. I think the period 5 comes at the end of this month.
I believe it's actually the 25th is the date that comes to mind.
Okay. Yeah, it wouldn't be the end of the month because it would follow the end of the period of period 5. And so after this month will be period 5. And then it'll be every month after that, it'll be the next period.
Maybe just to expand on that question a bit, are there any other deadlines that come to your mind for any of the programs out there that people should just be aware of?
CEBA, it looks, what I was reading this morning, it was March 31st for the small loan program. And there are some of the BC programs as well, which I don't know much about at this point, but those ones are currently still March 31st. So maybe we'll just quickly move on to the next slide. And I'll try to watch chat as well.
I'll try and look. There was a chart that I did have at one point. I'll try and find that, and then I can maybe post it in the chat or something. And it listed all of the deadlines there.
That would be helpful. Yeah, so I'm just going to do a sort of a quick update on the wage subsidy, the CEWS, and it goes back to the January 31st or 180 days after the qualifying period. So January 31st covered off the first 4 periods. And as Tracy mentioned earlier, we know what the periods are coming up to March 13th. The expectation is the periods going forward will all be 28 days going forward, but we of course don't know how the government's going to deal with the comparative periods. And the current CEWS program, the maximum subsidy you can get is 40%. And if you have enough decline, which is greater than 70%, you can get another 35% on top of that. And the other thing they changed was, sorry, I'm just gonna have to move this so I can see my slides. So they just basically made it possible for more employees to be, and their wages to be covered. It used to be if they had more than 14 days off in a period, they weren't able to get anything, or you weren't able to get any wage subsidy. Now you can. And the top up for the revenue reduction is all calculated basically using the same kind of percentages, the same comparative periods, and they use a 3-month average, whichever is going to be better for you. So this is just a nice little simple chart. Of course, if your revenue decline is more than 70%, you'll get 40% of the wages and another 35% top up, so a total of 75. And if you're below 50%, the most you're going to get is 40%, so you won't get any of the top up. And there still is a maximum amount per employee per week. So this is, again, looking at the average periods, the 3 months prior to come up whether we get the top up. And as Tracy said as well, is when we're looking at the revenue decline, we can also look at the prior month's revenue decline. So this is, and furloughed employees. So this, again, as Tracy usually says, we never really ran into this phrase before. This is where you've got employees that you're saying, stay home, but we'll keep paying you, which is a pretty unusual circumstance. So they're on leave with pay. They're not working, doing any work for you at all. And it can't be non-arm's length. So it can't be your spouse or your kids. It has to be actual non-family members. And we can actually pay them based on what you're paying them. And there's the greater of $500 or 55% of the pre-crisis. So up to a maximum of $595. And the whole idea here was to keep it in line with what people could get on EI. The other thing is for the employer, for the business or the not-for-profit, the CPP and EI that you pay on the employees, you can actually claim that back. So you're only deducting it from the employee's paycheck, but you're not having to pay the employer's portion. So that was really the end of the wage subsidy update. It's really the program have. Okay, so you're asking the question about the revenue decline. So there's 2 methods. Of course, you can do comparative to the previous year, or you can do comparative January, February. So if you're doing comparative to the previous year, if it's currently December, I would look at December 2021 and I'd look at December 2020. And then I'd also look at November 2020, and sorry, should have said December 2020 and December 2019. And I'd also look at November 2020 and November 2019. If November was a bigger reduction than December, for the December period, I could actually use November's numbers. I wonder if that's answering your question. Of course, if you're using the January, February comparative, so and I'm in the December period, December 2020, I would look at the average of January, February 2020. but I also take November 2020 and look at the average of January, February 2020. And I could use the, yes, and so the answer is I could use the November calculation for November's period, and I could use November's calculation for December's period if that was better for you. And as Tracy said, now we get to January. January, I could use January and compare it to January, or I could take December and compare it to December. So it basically just gives you that. Essentially, if you qualify in one month, you're generally going to qualify the next month. And that's sort of to try to put in the same, somewhat similar basis to the first 4 periods, where it was just an absolute amount. Okay, so that's the wage subsidy. I did do it I didn't cover the revenue too much on the revenue because we did cover it a bit on the rent subsidies. And it is still a fairly tricky calculation because you do still have to look at what the amount was earned in each of the weeks. There's 4 weeks in each of the filing periods. So it's not what they got paid, it's actually what they earned. So that can be a fairly difficult calculation in some cases. And you still also have to compare it to what the non-arm's length people were earning in their January through the middle of March averages as well. So it's still a fairly complex calculation if you have lots of employees. So then changes to the payroll filing for 2020. This is really to do with, I don't know why we said update to deadlines because it's February 28th. But what we have to look at is if you use the temporary wage subsidy or the twos, the 10%, whatever you want to call it, you have to file a PD 27 and before February 28th. So the purpose of this is actually so that CRA can reconcile the amount that's in your payroll remittance account to your T4 summary. So for example, if your T4 summary said that you'd deducted from employees plus your employer top up was $100,000, but the amount that's in the CRA account was only $90,000. The $10,000 that was from the temporary wage subsidy gets reported on the PD 27 and allows it to actually be tied in together. So that's the purpose of it. And so it's not a terribly complicated calculation or a complicated form to fill in, although I've reviewed a couple of them that were not filled out quite completely or correctly. And it does take a bit of time especially if you fax it in, it does take some time for CRA to process it. Now, if you never use a temporary wage subsidy, then in theory, you don't need to file the PD 27. But you certainly could do that when you're filing if you haven't already done so. And the other thing that you might find when you're working on your PD 27 is, and I've noticed this in a few cases, is the maximum amounts were taken were too much. So there is a maximum per employee and for the entire organization. And I've run across both where more than the amount should have been taken off per employee, or more than the 25,000 was done for the organization. So if you fill a PD 27 and send it in and it's more than $25,000, you're going to get called by CRA. The other nice thing they've decided to do is add complexity to your T4s. So in addition to everything else you might be reporting on the different boxes on your T4, you have to report 4 more boxes with these codes. And you have to basically put in what was earned in those periods, paid to those employees in those periods. So this doesn't matter whether you use the temporary wage subsidy or whether you use CEWS. You don't have to know whether your employees use the CERB or anything else. You as the employer doing a T4 have to report this. That includes for the non-arm's length employees as well. So if there's just one employee in the company, it's the owner, you still have to put this on your T4s. So the quick question about when you do the PD 27, do you have to change anything in your T4 summary if you have already submitted? So if you've already submitted your T4 summary and you didn't submit your PD 27, you're going to likely have to file an amended T4 summary. I think that would answer the right question, right, Tracy? And I think we're just going to quickly move on to a real brief chat about the CEBA program. So this is the program that came out fairly soon after the COVID hit. It was originally $40,000. Now it's $60,000. If you didn't apply for the original $40,000, you can still apply for the 60. If you applied for the 40, you can now apply for an extra $20,000. There is the forgivable amount. There is the forgivable amount on the first $40,000 is up to 25% of it, or 10,000, and it's up to 50% of the second 20,000. So it's forgiven if you've repaid the loan by December 31st, 2022. When you file your taxes, it's based on the assumption that you actually are going to be repaying it by December 31st, 2022. So for example, if your year end is December 31st, and when you're doing your 2020 tax return, corporate tax return, if you took out the $40,000, you've got to report that $10,000 in your 2020 tax return. The other thing is the money is required to be used for specific eligible expenses. And I'm just going to quickly go over and copy something I grabbed off the interweb, and I'll put it into the chat. It's pretty long, but it describes all the things that you can use the money, the loan for. So for example, if you took the $40,000 loan and then you use that money to, I don't know, say go on a holiday or pay a dividend or invest in stocks, that's not going to be considered to be an eligible expense. So you are, if the CRA audits you, you're not going to get that $10,000 forgiveness. We don't know what CRA is actually going to do about these CEBAs yet, because it's still early days and they still haven't come out. We do expect quite a bit of audit activity around that, though. Okay, so with that, Tracy and I would definitely like to thank you again for inviting us to speak here. And if you have any questions, we'll be happy to try to answer them now. Basically, I'll try to forego answering them and let Tracy answer them. If you think of something afterwards, our email address is there. Please feel free to give us an email, and we'll see if we can answer your questions, or ask Bev and she'll send it off to us as well. And with that, I'll turn it back to Bev.
Thanks, Scott. I just saw that Abigail posted something, and so I wonder if we missed a question. Abigail, I'll just ask you to unmute. Did we miss a question of yours?
Well, it wasn't one of mine, it was one of yours. It was the one about using November twice in a calculation.
Oh, yeah, Scott did answer that one.
I'm sorry.
Yeah, so you certainly can. Yeah.
And
You're
so,
using it, use it for November, and then you could be using November's calculation when you're doing December.
so then when you calculate December, okay, so if you're using, if we go October, November, December, because they've already passed, but if you use October to calculate November, as well as October, what do you calculate December against? Do you calculate December against the November actual, or the November amended, or which is actually the October?
Yeah, so good question. The amount you get for a subsidy does not get included in the revenue calculation. So the October calculation you used for October, and then you use the October number for November. November's doesn't change at all, because when you go to do December, you look at actual Novembers, or you can look at actual Decembers.
Okay, so you don't use what you reported as the actual November on your submission document, which is actually not November, it's actually October, correct?
Yes, when you do the calculation, you actually report it based on the previous month.
Yes. And so then when you're actually calculating December, you actually are calculating something that you haven't indicated on your submission document.
If you're using November, that's right. Yeah. And that's why, like I said, the calculation is fairly complex, and you do need to keep copies of that for yourself, because we do expect a fair amount of audit activity around it.
Yes.
Wow. So hopefully, I know that we're just coming on 12 o'clock now. So any other quick questions? Oh, there's Tracy. I just see that you put that deadline in the chat
just
room
put
there.
the next couple there, so hopefully so the 25th is our next CEWS deadline next week, so hopefully that doesn't cause anyone to panic.
Dave, do you have anything you'd like to add before we close off?
Not with regards to Tracy and Scott. Just thank you guys very much for taking your valuable time to share with us all. And I'm thinking of other people I should have had on the call, but yeah. Anyways,
Well,
and I don't think this is one that we just say, "Oh, here's a PowerPoint. You're fine to go with that." So next time.
No, although we do have this recorded, so we will post that as well. So, and I'll try and get that up right away so that people can access it if needed. And I'd just like to extend my thanks as well on top of Dave's, Tracy and Scott. We really appreciate you being willing to do this and bringing your expertise to the group. I know that I learned a couple of things that changes my life today. So thank you everyone for joining us. Really appreciate you taking the time. Have a great remainder of the week. Stay safe.
Take care, all.
Thanks, everyone.
Thank you.
Thanks,
Bye.
Scott. Tracy. Bye-bye.